Welcome back, everyone. This is Jacob Shoup. You're watching the Tom O'Brien Show. Let's take a look over here at my screen. I want to go over to TFNN.com. We're going to go over the newsletters tab. Every Monday, we are joined by Steve Rhodes. Steve Rhodes is the author of Mastering Probability newsletter. He's also the host of Trader's Edge right here on TFNN at 11 a.m. Eastern Time. Now is a fantastic time to check out this newsletter, not only because it's the holidays, not only because every time we've had Steve on, it's been just some of the most interesting analysis that I've come across recently, but then additionally, you go over to the homepage, you can go ahead and do the TFNN Holiday Tiger Dollar Sale. Again, we have fantastic bonuses. That is up to a 40% bonus. Those Tiger Dollars, when they get applied to your account, they go towards all purchases here at TFNN, and they never expire. So go over, grab some of those, check out Mastering Probability. What I want to say as well is if this is your first time subscribing to Mastering Probability, you can do so risk-free. We have a 30-day money-back guarantee. If for whatever reason it doesn't work out for you, we are going to bet that it does. Steve Rhodes, how are you doing?
Doing great, Jacob. How about yourself today?
Doing well. Ready for the holiday season, Steve.
Yeah, well,
almost here.
Much, I had some last-minute things to do in between getting off of my show and getting back here in time. And boy, there are a lot of last-minute shoppers out there.
Yeah, there are.
It's crazy. It's crazy down here. Probably crazy in your neck of the woods as well, just simply because of the seasonal patterns that we have, with people flowing in. But it's just absolutely cuckoo. So luckily, I got all of my errands done with the exception of one, and I'll deal with that later on tonight. But thanks for that introduction.
Absolutely.
Let's take a look at some other so I didn't really have anything prepared because I had just too many things going on. But still, that doesn't mean that I'm not prepared. In fact, I want to share with listeners something that's really important. So I was listening to you during about half of the segment there. I turned in just as you were really talking about Bill Ackman, a lot of money on the side.
Yes.
Looks like the markets, are likely to head higher out there.
Yeah.
And you've also said that I look at markets maybe a little bit differently. I consider that to be my edge.
It's awesome.
Okay, and so one of the chart that we've got up on our screen right now, and I shared that this morning on the Trader's Edge, and we took a look at it one other time. And the number is, I want people to write this number down on their pad of paper. It's 42,850.40. 42,850.40 is the low of the trading session after the election. So that's the November 6th low out there for the Dow. Now, what I would be advising a DJT, Bill Ackman, and anybody else that believes that this market's going to explode to the upside, you better watch 42,850.40. What's interesting is on Wednesday, price just crushed through that. That was the Fed. That was a reaction to the Fed. Then we had Thursday. We had a little bit of a gap. And then we had that gigantic rally, right? 1,000-point rally. That's not where it closed at the end of the day on Friday. And where it did close is right below 42,850.40. If price stays below that, what we're going to see, and I'm not talking necessarily long-term, although it could be a year or two, but I'm not going to go there because we take things one step at a time. As long as price remains below that, the pressure in the Dow is to the downside, not to the upside. In fact, if we take a look at this, and how I really came upon this was, you and I have talked about presidential seasonal cycles before. I have shown those charts to folks out there.
Yep.
And I said to myself, well, why don't I just go see where the market was trading at the beginning of each presidential term? Here, for example, is the Biden first administration term out there. Price remained above that breakout level. And I'm referring to that first trading session after the election is really a breakout area out here, or a level to watch, a support or resistance line. Maybe that's a better way to explain it. If we come back a bit further and we take a look at this first Trump term out here, what was really interesting and what just kind of blew my mind was, now there was a pattern that formed at the bottom of the COVID lows out there. There was a TD9 count bottom pattern that formed out there. But what I didn't realize was that price had pulled back basically to that support level or that breakout level during the first Trump term and then simply took off from there. So nothing was really broken even at that time. If we go back further and we take a look at other terms, here's Obama's second term. And so right now, I'll just try to, where we're at is perhaps a little bit about where Obama was in the second term with regard to the way that the Dow was trading. So I'll show you this, pulling this back right here. Now, the difference here is that if we take a look at the first trading day of the year after that election, November 7, 2012, we saw price just move steadily downward. Came back up, tested that resistance level, got above it, tested it, pulled back down, tested again. Once we got above it, we were okay out there. But if we go back and we take a look at Obama's first term, what's interesting here is when price even pulled back. This is a retracement back in July of 2010. Look at how price pulled back, tested and rejected that level, and then took off to the upside.
Yep.
So this is a data point that I'm not aware. Maybe somebody else has also discovered or identified this. I haven't heard it before, but this is a real key level. If we keep going back just a tad further out here, we take a look at this is Bush Jr.'s second term. Notice how price, what it does after the second term, price moves up higher, pulls back, tests it, rejects it, and then we continue to move to the upside. If we take a look at his first term, a much different scenario. Of course, during the first term, we had 9/11 out there, but this is a real key level to be watching. So I'll go back. Any questions about what I've shared or shown?
No, I don't have any. If anyone does have questions, please ask, though. I can relay them to Steve.
Yeah, so pretty cool. Right? Because
Absolutely.
you don't have to be a technical trader to try to understand what the market is communicating to us. And hey, if we show back up tomorrow, price goes about 42,850. Okay, keep watching that level out there. But right now, what we've seen is something completely different than the first term. And I know all the great accolades or what have you, all the stuff that I hear out there that market's going to move to the upside. Well, if it is, you're going to have to see price stay above that 42,850 level. So that's one thing that I want. That's a little Christmas gift, if we Hanukkah gift to everyone out there. Another thing that I can share with folks is really last week. If we take a look at last week's price movement out here, the one thing is as price was moving lower, it was cascading lower during the Fed day. This is we're looking at the New York Stock Exchange. That's a chart up at the top. The next section is the advanced decline line, and below that is the advanced decline oscillator. That's the difference between the 19 to 39 period exponential moving average of the advanced decline line. It has really cool properties. And those properties help us to establish objectively a market that's either overbought or oversold. In this case here, when you get below the minus 150 level, which we did on the trading day of December 16th, that's telling you to expect or anticipate some type of bounce or rally or bottom because the oversold conditions need to be worked off. Now, price can get even more oversold, so you're always looking for some bottom signals and so forth. If we take a look at by the time we got towards the end of the week out there, we got down to a level of minus 287. And the last time that we were down at that area out here was back in the April of 2024 timeframe, was April the 16th. Obviously, we simply moved out of there, went ahead, made higher highs out there, made new all-time highs and so forth. But just simply getting down there, understanding that the market is overbought or oversold, in this case here oversold, is to expect and anticipate some type of a rally. There's another element that we take a look at, and that is the spot VIX index. When the spot VIX index, so the other thing that took place, let's talk about what took place on Friday and Thursday last week. On Friday and Thursday, we had a spot VIX index that traded at a one-day rate of change below minus 10%. It was at minus 12% on the 19th, and it was at minus 23% on the 20th out there. And what those do, if folks can grab a snapshot of the screen out here, these green arrows, those are signals of an initiation to higher price. And that, in essence, is what we've seen since then. I see we're running out of break time here. If you want, we can talk about it further.
Sure, absolutely, Steve. Yeah,
okay. All right, let's do that.
Folks, we'll be right back with Steve Rhodes after this break. Welcome back, everyone. This is Jacob Schubert, joined right now by Steve Rhodes. Steve is the author of Mastering Probability newsletter and the host of the Trader's Edge right here on TFNN at 11 a.m. Eastern Time every trading day. Steve, before we went to the break, well, I guess you have the SPX up right now. What are we taking a look at with this?
Still have that chart here for the spot VIX and and it is the S&P 500 that I've got up on top of this chart here. And so, what I'm sharing with folks are technical tools, but you don't need to be a technician.
Sure.
They're tools that help you to understand what the market is likely going to do, perhaps on the next trading session. And just before we went to the break, we were talking about one-day rates of change in the spot VIX index. And when they go to when the rate of change is less than minus 10% out there, that's an initiation. That's a signal. That's an initiation to higher price. Those are the green arrows on my screen out here, and they work really well out there. And so, in the face of we also have the spot VIX. It's great properties. Also, there's a one-day rate of change above plus 10% out there. And in fact, that's what took place on the trading session. If you take a look at this, that's what took place on December 18th. We had a one-day rate of change on spot VIX of 74%. It's not the highest ever out there, but when we get anything above plus 10%, it tells us the market should rally or bounce or bottom the very next trading session. And in fact, that's what took place in the equity futures market, even through most of the morning, that following trading session. And then we get that one-day rate of change to the downside below 10%. So these are just simply tools to help you monitor, understand, take out the emotion, I suppose, of what traders are thinking out there.
Sure.
And just be objective with regard to these signals. There's another element of the spot VIX index, which is where's the trading relationship to its 50-day exponential moving average. The red line on the bottom of the screen out here, Jacob, is the 50-day exponential moving average for the VIX. That's currently printed at 1671. The VIX right now trading at 1730. The green rectangles or boxes on my screen represent time periods when the spot VIX is below the 50-day exponential moving average. The market, or the S&P 500, I should say, typically moves sideways to higher out there. Likewise, when that spot VIX gets to above the 50-day exponential moving average, and those are identified by these yellow rectangles or squares out there, typically the market moves sideways to lower. So this is also another very valuable tool. Everybody can see what the spot VIX is. You can get it from so many different places. Measuring the one-day rate of change, that's pretty easy to do. And then it's just a matter of knowing where that 50-day exponential moving average is. Of course, you can subscribe to Mastering Probability or tune into the show,
yes,
or things of that sort. So pretty cool properties, I think, just simply with regard to the spot VIX. It's technical information where you don't need to be technical, so to speak.
Love it.
Any questions there?
I don't have any questions there. I'm not seeing any right now in the den. I'm going to check the YouTube, but we can move on in the meantime.
Let's go to the last thing, if we can, out here. And it was, I think it was maybe some chatter or discussion just as I was trying to sign on about a stock symbol. Is it Seal Square? Is that the name of the company?
Yes. The ticker is actually LAES.
LAES. It's Sales Square. I think it's is it a security, technology security?
Yeah, they're doing post-quantum security, particularly for IoT devices, but they're doing public key infrastructure. Very interesting kind of stuff. I've been following it pretty closely. Den members love this stuff, so.
Yes. And so kind of the question is, I think maybe I saw is, maybe there's going to be some profit taking. Yep. And when I kind of convert profit taking to not just are you going to take some profits, take some money off the table, but have we reached the top? The type of top where maybe we could get some type of pullback that folks would want to consider taking a long trade in it. If we take a look at this instrument here, and I'm just simply going to start just simply to not take up all of your time. The last time that the LAES topped out here of any significance took place back on August 27, 2024. And if we take a look at the black digits that are above the candles out there, you'll see that was bar number 9 of a TD9 count. That was the last time that it formed a top. Price pulled back and tested support, which was the bottom of its TAS market profiles out there. The last significant bottom that we had out here was a TD9 count bottom that took place on November the 4th. And since then, we've had one heck of a rally. The cool thing about a TD9 count pattern, and I teach this to subscribers, there's a 1 hour video on this pattern. You should want to do it. If you trade a handful of stocks or whatever it is, or maybe your time frame is weekly or daily, this easy pattern to identify that's out here. And a top for a TD9 count, the high needs to be on bars 8, bar 9, or the bar following bar number 9. Well, Friday was bar number 9. Today is the bar following bar number 9. So is there the potential for a top inside of LAES that begins today? The answer to that question is yes.
Yep.
However, what I like to do, and if you think about it, at least I like to, this is called Stevie logic. If we're going to form a top on a daily time frame, then intraday charts should start showing us topping signals and support levels failing. Kind of makes sense?
Yes, absolutely.
So what I've done is this is a set of charts of intraday time periods. For example, you'll see a 195-minute time period chart. That's because there's 2 equal 195-minute bars in a day. There's 330-minute bars in a day. So that's why I'm using what somebody might think are some odd time frames. But when we're evaluating volume on one candle versus volume on another candle, it'd really be helpful if it's the same time frame. So that's why I've got those times out there. So if we look to the 195-minute time frame chart, there is no topping signal yet. What this would need would be a bearish reversal candle to confirm what I refer to as a Rhodes momentum indicator top. If we take a look at the 130-minute time frame chart, we're in bar number 6. There's no topping signal as we speak just yet. So this says, hey, maybe Lays has not topped. If we take a look at the 65-minute time frame chart, it negated a TD9 count top. That took place. So this is really the exact, well, I'm sorry, grabbing the wrong tool out there. If we take a look at the 65-minute chart, it's a little bit similar to the daily in that it formed the bar following bar number 9, and that was at 13:50 hours this afternoon. But price closed above it and negated that at 14:55. So that pattern doesn't show a top. If I look at the 30-minute time frame chart, I don't have a topping signal. The only time frame right now that I have a top for is the 15-minute time frame. What does that mean? Well, there's a TD9 count, Rhodes momentum indicator top. It would start here. If there was going to be some type of top, and I'm not saying it's 3:37, it's not going to be today. This would be something for folks to be watching tomorrow. If there's going to be some type of top, any topping potential here, what we should see is price close below 440 and then make its way down to 381. TD9 count patterns or any pattern, sometimes they fail, sometimes they don't fail. But when you know that you've got a pattern where you're identifying a top or a bottom, what you really want to do is go to those intraday charts and see what kind of signal information we have. So is there the potential for the top because we've got that TD9 count? Absolutely. But we're just not seeing it yet on those intraday charts. Keep watching those intraday charts, so that's where you would see that topping pattern information be released to us.
Fantastic. Steve, thank you so much. I know we got some people who wanted to hear that in the den, myself as well. Always appreciate you coming on. I hope you have a fantastic Christmas. All right, Steve?
I will. You too. We'll talk to you next Monday.
Sounds good, Steve. Take care. Folks, we will be right back. Again, you got to get Mastering Probability newsletter. Check it out. You never done it before. 30-day money-back guarantee. You don't have anything to lose. We'll be right back.